Mcom Semester 4, University of Mumbai. We are doing subject corporate financial accounting, question bank solution, topic valuation of business, problem number 8. This is the last problem sum in this topic. So we have already done 7 sum and this is the last one, 8 sum from your question bank. So let's see the problem sum. So for yield value of equity share, we have a 3 steps. So in strict value, we are going to find out how much capital employed is available in the first step, and then we'll do the second step as a calculation of a strict value. And in the yield value, we will first find the FMP, that is future maintainable profit, then rate of FMP, and then we'll use the yield value of equity share formula, and we are going to find out the solution. We'll find the yield value of equity share. So this is a solution for your problem, sir. See, Mrs. J Limited, you will write on the top, then you will write in strict value of equity share of the company. So we are going to find out in strict value of equity share of the company. Then in the step 1, we are going to calculate the amount available to equity shareholders. Okay, so you have to find out what is the amount will be available to equity shareholder, and how we do it. We'll just take asset at the market value and less liability. So in this sum, we are not any additional information regarding revaluation is not given. So we are going whatever values are given in the sum. So the asset and market value, land and building is 9,80,000, plant and machinery 6,60,000, furniture 3,20,000, stock in trade 12,10,000, debtors 14 lakh, and cash and bank 6,80,000. So if you total this, okay, you will get the amount 62,50,000. Then we are going to deduct all the external liabilities. Okay, so we are not going to take your general reserve, profit and loss, or share amount, which is the internal liabilities of the company. We are going to take only the external liability, that is creditor, provision for depreciation, provision for taxation, and proposed dividend. So when you are going to add all these 4 liabilities, you will get your total as 28 lakhs 90,000. So 62 lakhs 50,000 minus 28 lakhs 90,000, you are going to get the answer 33 lakhs 60,000. Less you are going to do the paid up preference share. So if you see in the problem sum, in the first they have given 1 lakh 60, 1,60,000, 8% cumulative preference share of rupees 10, value of each is a 16 lakh. So you are going to less that paid up preference share capital from this 33 lakh 60,000. You will deduct 60 lakh as a preference share capital. So the net amount available to equity shareholder is 17 lakh 60,000. So this is the answer of your step number 1. So amount available to equity shareholder is 17 lakh 60,000. Then you will do the calculation of step 3, where you are going to find out the strict value of equity share. So what is the formula? It's very easy. Amount available to equity shareholder, that is your first step answer you will write, divide by number of equity shares. So how many shares here it is given? It is given 1,20,000 equity share of rupees 10. So number of equity share is 1,20,000. So you will going to divide this amount available to equity shareholder divided by number of equity share. So 17,60,000 divided by 1,20,000, you are going to get your answer 14.67 per share. So value per share under the net asset method is rupees 14.66 per share. So rupees 14.66 per share. Okay, so whenever we are doing this sum, please do with me. Keep the calculator with you, and you can just keep on doing the problem sum. So it will be, you will understand it in a better way. Okay, so here we have calculated in-strict value of the equity share. Now the second, they have told us to find the yield value of equity share of the company. So here we are going to do the 3 steps. So you have to remember three steps which are very easy. First step is your calculation of future maintainable profit. Second is what rate of future maintainable profit, and third is what calculation of yield value of equity share. So these 3 steps are there. Now the formula of FM is here. That is a little bit change in the when we find out the yield value of equity share. So FMP at after tax minus preference share and minus transfer to reserve. This is your formula for finding out FMP. So average, first you are going to find out the average profit, that is FMP. So how you always find out the average profit? By taking the total profit, whatever years are given, you have to calculate that total profit divided by number of year. So here they are given from 2008, 18, 19, 19, 20, 2021. So 2018-91 amount is 12 lakhs 20,000 plus 1920, the amount is 18 lakhs. So you are going to add that plus 2021 22,040, yeah, 20,000 22 lakhs 40,000. Okay, so you will add on this divided by number of years. So you are going to get your answer as 52 lakh 60,000. 52 lakh 60,000 divided by 3. Divide by 3. So after doing this calculation, you are going to get your answer 17 lakhs 53,333. This is your answer. So this is your FMP after taxation. So now by putting this FMP after taxation in the formula of FMP, you minus, so you will put this amount FMP after taxation, tax 17,53,333 minus preferred dividend. Okay, so what is the preference dividend here? It is 8% cumulative preferential of rupees. So of 16 lakhs you have to take 8%. Okay, you have to take 8% of 16 lakhs. 16 lakhs into 8%. So you will get your amount 12,000, 1 lakh 28,000. You will get the amount 1 lakh 28,000. Okay, 16 lakhs 8% is what? 1 lakh 1,28,000 minus transfer to reserve. So transfer to reserve is not given in the problem sum. So we will consider it as a 0. So FMP equals to FMP after tax, that is 7,53,333 minus preference dividend, that is 8% of 16 lakhs. You will get 12 lakh 1,28,000 minus 0. So when you calculate all this amount, you will get your FMP as 16,25,333. So this is the answer of your step number 1, that is FMP equals to 16,25,333. Then in step number 2, you are going to get calculation of rate of future maintainable profit. Okay, calculation of future maintainable profit. So how you are going to calculate it? Then second step is calculation of rate of future maintainable profit. So what is the formula of rate of future maintainable profit? FMP divided by paid up equity share capital. Okay, FMP divided by paid up equity share capital into 100. Okay, so future maintainable profit, as you got in the answer in the step number 1, 16,25,333, you're going to take divide by paid up equity share capital. So what is paid up equity share capital? It is 12 lakhs. Okay, 12 lakh as given in the problem sum. So it is given that 1,20,000 equity share of rupees 10 each. So that is 12 lakhs. So you will take this paid up equity share capital amount, that is 12 lakh into 100. So when you will do this calculation on your Calc, you are going to get the answer rate of future maintainable profit as 1 135.44%. Okay, 135.44% is your rate of FMP. So this is the answer of our step number 2. Now the step number 3, that is our final answer, that is calculation of calculation yield value of equity share. Calculation of yield value of equity share. So yield value of share equals to rate of FMP divide by NRR into amount paid per share, okay. So rate of FMP we got 135.44 divided by NRR, so it is given in the problem same. The fair value of a similar business is 12%, so NRR is 12. So you're going to divide it by 135.44 divided by 12 into 10. Okay, so your answer will be 112.87. 112.87. So yield value of equity share is rupees 112.87. Okay, so yield value of equity share is what? 112.87. Okay, so this is a answer for your problem. So in this way we have solved our last problem of on topic valuation of business. Okay, so you can refer all the 7 part, link is given in the description box, so you can check that and you can solve this. It will help you in your exam. If you do only this exam, the similar type of problem will be there in your exam, so you will get this type of sum for 10 marks. So it is very easy. If you practice this exam, you will able to solve your question bank. Okay, so this is our answer for a problem number 8. Okay, so we'll continue with the next topic in our next part. So please subscribe and click on notification bell icon. Thank you.